Hey, everybody. Thanks for coming. As you come in, say hi. I know we already have some people logging in. So say hi in the chat. If you have questions as we go, make sure you go on. We have a very special guest today. My name, if you're not familiar with me, I'm Jeff Gibby. I do a lot of things. I work as a scanner. Also, kind of, I'm in charge of the Traders Forum. So welcome to the Traders Forum. It's great to have you. If you're watching us on YouTube, welcome. Let me go ahead and kind of read the information that will make our lawyers happy. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading securities. Metastock, Traders Forum, LLC, their employees, and their guests disclaim all liability for investment decisions by investors based on the use of the software, trading strategies, or any information provided in connection with the company. Metastock, the Traders Forum LLC, their employees, and guest speakers do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in this presentation should be construed as investment advice or the solicitation to buy a security. Hello, Saki. Maverick, thanks for letting me know that the audio is good. Um, as we get started, I want to know if you're watching this on YouTube, like and subscribe. It helps a good deal. But also, I want you to give you a personal invitation to join our community. It's a growing community of traders. There's live market chats. There's lots of resources where you can learn about technical analysis in the markets. It's designed to be a community of traders helping traders. You can find out about it at thetradersforum.com. So www.thetradersforum.com. Our guest today, you can see her, is Martha. Martha is a huge friend of Metastock. How long ago? Do you remember how long ago I went over to the TechniTrader ranch? It's been a minute.
It's been like 2008 or 10. It's been a while.
It's
Yeah,
been
yeah.
uh,
I'm on the ranch right now. So
yes, it's such a beautiful place.
yeah.
Martha has such a beautiful property outside of Seattle, and I'll say a few things about her. But before I do, I want to say you can go to www.technitrader.courses. If you have questions, you want to kind of get involved with Martha at all, you can go to you can call 888-846-5577. And just to kind of talk a little bit, that's where the screen sharing ends. To talk a little bit about my experience with Martha, uh, uh, I've been down to the ranch. Very, very impressed with her. We've been doing business with her for a number of years, and I love having her in to kind of talk about the markets, talk about what she's doing. She was in one of our very, very early editions of Ticker Talk. Somebody that can has a lot of skills. She can make a really, really good honey walnut salmon. That was delicious, and I'm hungry right now. So, uh, very good at trading. She likes to look at her own custom indicators that she's designed. I'm going to let her talk a little bit about those as well. Very, very good teacher. She's been teaching in the market for a number of years. The TechniTrader business has been AAA rated by the Better Business Bureau for as long as I've known her. And I think and also I've learned she's a very good ballroom dancer. So,
That's my exercise.
yeah.
Yeah.
Have I missed anything?
Well, there's a lot to me, but that's good enough.
Yeah. Anyway, thanks for being such a great friend over the years.
Oh yeah.
Um, I kind of in the show notes, I'm going to link the session that we did last time because it was great. But I know in your and then we're kind of going to talk a lot about some of the stuff that I wanted to ask about as a follow up. But I think where is a good place to start is like what if people only watch the very first part of this and they're brand new to trading. I want you to give them a piece of advice in terms of what they think, what they should do.
Well, first of all, we talk about the three pillars of success, and education is a big deal. A lot of people think that they can do it yourself and they can figure it out, but actually, it's far more complex and complicated than you think it is. There are 12 different market participant groups. not just Wall Street versus Main Street. Throw that out. That's been gone for about 50 years. Uh, the structure is what you need to learn. And when you learn the structure and you learn the different market conditions and you learn all these different things, it makes it easier to trade because you go, oh, I get this. I just had a new student finish a course and they said, Martha, it was like mind boggling at first. It was like really, really a lot of stuff to grasp. But then when I was through, I realized it was like being back in college with my favorite professor who really got us to really think and learn and identify. And I'm just ready to go. And it's thrilling for me when students succeed their own expectations because that's what it's all about. Raise your expectations. Retail traders in general want so little out of the market, and there's so much to have. So you need to raise your expectations.
Right on. I think that's the first time I've ever heard it said exactly that way. A lot of times it's like, "Be careful," and that kind of stuff. I
Ah,
like that.
oh, just just you have to understand the market structure is very, very big, dense, and complex. And if you understand the hierarchy that's going on with it, who should you be following? Well, you shouldn't be following small funds managers. And a lot of you do without even realizing you are, because you need to go back and say, how many assets under management are they managing? Anything under 5 billion is a small fund manager, and he's all over TikTok, he's all over YouTube trying to promote his company. He sounds big and amazing, but he's not even professional. He's a retail site. SEC doesn't consider any of those people um, professionals. They consider them on the retail side. So you need to be careful who you listen to.
What do you think is the biggest mistake that you've made in your early trading career, and did you
And
learn from it?
listening to other people instead of listening to my own head. I
Okay,
learned very quickly. The second biggest mistake was me running around telling everybody that I knew that this was going to happen. Microsoft, buy Microsoft. Oh no, it's Apple. Apple is brilliant. They've got Steve Jobs. No, 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 it's going to be Microsoft. I gave up doing that kind of thing a long time ago because it doesn't work. And then they come back to me later and they say, "How did you know that?" It's like because I understand the mechanics of new technology have always fascinated me.
cool. Last time you talked about how your grandfather got you into trading. Can you kind of cover that again a little bit?
Well, I was a young girl, and we always went over to my grandparents' house once a month on Sundays to have the family meal, like we everybody does. And I would sit at on the floor next to his rocker that he sat in while they were waiting for dinner, and he was studying the columns in the Daily Journal of Commerce, where he worked on the stocks and prices and everything. And so I asked him about it, and he started explaining this and everything, and I learned that by the time I was 12, I learned that he had supported his own family, his mother, his brother was always out of work and everything, and he had to retire early because he had a bad heart. And the doctors had said, "Oh, Otto, you need to retire, plan your estate and everything because your heart's so bad, you won't, you know." And he was 45, and he lived to 96, so
Nice.
he proved them wrong. But meanwhile, he invested and he was able to take care of an extended family. And I wanted to do that because my family had 9 children. And by the time I was 15, both parents were very sick. And so I was hounding him to teach me, and he didn't want to teach me. He wanted my brothers to come because he'd say,
Yeah.
"Honey, the men in your life will take care of you." And I thought, no way.
Yeah, yeah.
And I had a burning desire. So I'd save money, and I went back and asked him. And so finally, I saved $5,000 because I was working 3 jobs. And I said, "Grandfather, I'm the only one that's interested in this. I've tried bringing boyfriends over. I've tried all kinds of things, but nobody's interested. My brothers could care less. If you want to pass on your legacy of knowledge, I'm it." And he was so impressed with everything. And I'd never asked him for anything during all the trials and tribulations of having 2 sick parents and raising siblings. Did I ever ask him for money? Never. I was too proud, and I was going to make it on my own. So he started explaining to me, and he showed me all the different stocks he was in and why he chose them and everything. And then he pulls up this one a stock certificate, and he looks at it, and he looks at me, and he looks at it. Now, my grandfather was extremely conservative. He was, he was an adult through the Great Depression and all of this, so he understood the dynamics of this situation. And he looked at me, and I realized he was going to say something that was way out of his comfort zone. And he said, "I have made more money in this one stock than all the other stocks combined." and what it was. And everybody says, well, which stock was it? And it's like, no, that's not the point. The point is, it was a new technology. It was actually part of a component of newer technologies. And it blasted out of the stratosphere and made him an enormous amount of money. So then he started learning to learn about new technology, and I learned about new technology, and I'm going, whoa. So one of my specialties is new technology. I'm always way on ahead of it. I'm telling my students, I give virtual courses and things, and go, this is what you should be looking at. We have 20 new technologies coming to market right now. AI is just the beginning. Oh my gosh. And everybody, you asked me, we're going to ask me, which is my favorite. Well, right now you need to be watching robots, hyper automation, distributed ledger is already pretty much integrated, and cloud is integrated, but AI is going to shape and form everything. So we're on the cusp of this massive explosion of new technologies that happens after every pandemic. We have this time of angst and this pendulum that swings radically right and radically left, and finally it starts shifting down. But you can't rely on the government to fix things. It's the corporations. What the power of the United States and America and the global community that shares all of this, because I have many, many foreign students, is the US stock market. It is the safest because of all of the regulations and the SEC and FINRA and CFTA and all the others that manage it. It has the largest group of stocks to trade. There's almost 7,000 right now. It has the largest group of ETFs, ETTs, ETPs, blah, 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 and digital assets are coming. Non-fungible tokens are coming. I mean, it's massive. You don't have to learn any other financial market like commodities and how to trade that. You can just stay in the stock market. You can even trade Bitcoin in stock market with the BTC now. So it is an enormous opportunity. It's safe, and it drives the economy of the US and the global market. We have a NASDAQ and Amazon marriage that is like, oh, this is made in heaven. This partnership is going to help the European community grow, have more opportunities to invest in everything. So it's our corporations that rule the world, and you have an opportunity to be as wealthy as you wish to be.
Nice. Nice. I know it's not important, but what stock was it?
I can't remember. It was a component. It was a component of a vehicles for cars, and
Right.
it was for all the cars and the other thing. The thing that I remember most is like I'm thinking about a company. I should be thinking about the new technology, and it changed everything. So from after that, all I was doing was going into scientific journals and technology journals and listening to my programmer brother about all the new technologies that were coming and everything, because it was the new technologies that transformed things.
Cool. Do you think ballroom dancing helps with the trading that you're doing? Do you think it has any impact in terms of what you're doing on a day-to-day basis?
Well, it actually relieves some stress. I have to shift my focus to being a student and learning, and it is extremely physically and kinetically demanding. And it's hard, and I love hard. Everything about what I do it has challenges to it. If it's super easy, I don't want to do it.
Gotcha. I gotcha.
But it also reminds me as a student that it's hard in times to learn, and sometimes you need things repeated several times in various ways until the light bulb moment comes on. So it makes me a better teacher.
Do you is it safe to assume that you would consider yourself as a swing trader?
That's my favorite. Yeah. Yeah. But I
Okay.
will platform position trade if that's the market condition. Sure.
Now, I think a lot of people have different definitions between swing trading and kind of active trading and platform position trading. Can you kind of define what a swing trade means to you? Like how long a hold is usually on it?
Swing trading is sweet because if you can get into the bottom, we have a lot of stocks bottoming right now. So it's swing trading is really where it's at right now. And what it is you can follow the pro traders. And if you can follow the pro traders, they have these little nudges now because they're penny spreads. They're using AI for selecting stocks. It's helping and assisting them in finding where dark pools are and things like that. So they'll do these little nudges, and then that triggers the HFTs or memes groups or others, and they drive the price up. So what they do is they just ride the momentum of others buying. So they keep a penny spread and type of thing. But swing trading is a 1 to 10 day run up, and the biggest one I ever had was 50 points. It's like,
Okay.
okay, sell. It was a huge thing, and then you have to calm down because there's no such thing as a brilliant trader. There's only brilliant moments, and that is one of my biggest brilliant moments. 50 points. I haven't ever repeated again, but I do expect to in the next few years.
I
So
love saying there's not brilliant traders, there's brilliant moments in trading.
moments, yeah,
Yeah.
and you have to bring yourself down to. I always get up in the morning, sit down with my cup of tea, and I say, Martha, you don't know everything about the market. What are you going to learn today? Because it is constantly changing and evolving. And I try to discourage people from relying on 1990s technologies and the way we traded stocks in the 90s, because that isn't even, there's nothing remotely similar about the two situations anymore. They're totally different market structure, completely. Doesn't
What kind
know everything. Big
what
change.
kind of sorry. What kind of tea?
Oh, tea. I like in English tea. I have it in.
Okay,
Yes,
cool.
I pay for it.
Now you talked a little bit about swing trading being a day or two. Um, how would you qualify platform day trading or
Platform
platform trading?
position trading is when it happens mostly after a severe correction, an intermediate term correction like we had in 2022. We never really got into a bear market because there was support the market by the buy side institutions. They kept supporting the market so it wouldn't go into a bear, so they didn't have the 401ks panicking and running for cover. They're very wise people, much smarter than the banks. But or a bear market. Well, like in the bear market, of well, even before the bear market of 2000 and then the bear market of 2008, everybody was afraid to get into the stocks after 2000 and that long, lengthy, and then all of the fiascos of that. So that's when I first discovered the platform position trading. I thought, this is a whole new pattern. Wow, that's really cool. And it happens after corrections. So they're bottoming and there aren't any retail investors. They're scared of the market. They're investing in real estate or something else. And so there's a low level of that. So that sideways, fairly tight consolidation, compression pattern that has very specific highs and lows developed. And it has a 1 to 3 month pattern, usually 3 months. It goes on, and then all of a sudden, HFTs, the pro traders get in because they can see that, and that nudges, and HFTs gap it up to the next level, and then it goes sideways again, and then gaps up and goes sideways again, and then pretty soon it starts into a swing trade. So you can take your platform position trades in the slower market of a platforming market where the buy side institutions are absolutely controlling price, pro traders and HFTs. Investors are scared of the market. Retail day traders are trying to trade those intraday, and you can't. The penny spread is just too tight. So the platform position, I had a employee. She was a graduate of MIT. Her husband was a graduate of MIT. He made a huge amount of money in Boeing, and she started out with $3,000. She had decided to raise her children and stay home, and she wanted a job uh, that she could do at home. So she became a semi-professional trader, and she would beat his income every year just doing platform position trading for a number of years. And then she started learning swing trading. All her kids went through our programs as well, and they're doing really well. So it was quite a success story. Only $3,000. That's all she had to start with, and she really blew it into a huge, huge thing.
That's awesome. What would you say is the biggest misconception about trading new traders have?
That it's simply a matter of taking a recommended stock or chat room stock and day trading. That's the biggest mistake.
Okay. You've created a number of courses over there. Do you know how many courses you've made at TechniTrader?
Well, I do revisions, but essentially the basics. I have 50 courses.
Okay.
They cover different. Some are virtual courses on new technologies, and so each one is different. I did 2 on cloud technology, that sort of thing. We have specifics because I have professionals around the world and prop desk traders, and I have multi financial market traders and that type of thing around the world that also they need the training that I provide. And so I even have trading as a business. That's for my retail traders who want to trade as a business under the US and European US IRS. I don't know what the European is called. Canada also has something. And what it is that it gives you the information on how to be able to open a subchapter S corporation, and then you trade under that status. And then you can write off everything, where hobby traders, which most people are, they can't take off anything. They don't qualify for any of the tax exemptions that professional traders take for granted, because the professionals can write off their office, they can write off their computers, they can write off meta stuff, they can write off all their education, they can write off, electrical, all the things that a small business would be writing off, and so their taxes are lower, considerably lower, and the audit value. So this subchapter S is the lowest audit of all. Yeah.
What is the what is your favorite course?
What is my favorite course? Still the methodology course, I would say, because it is so comprehensive, and it opens a world of opportunity to people, and it blows their minds. They have no idea that they don't know what they don't know. I mean, it's like, I had no idea. And I think that one is always going to be my favorite, because it can be the only one they take, and they can do extremely well.
I have to be honest, I didn't expect an answer.
That's my favorite.
'Cause it's like kind of one of those questions. Who's your favorite child, right? Like,
No,
so
that's my favorite child, because it was the first one we did, and it's been revised 10 times, and it keeps growing and changing, and, we Howard and I worked on it together for a long, long time, because we wanted to make sure, and he called Herzog, the market maker, and told him about our special order type and everything, and Herzog said, "That is the most amazing order type I've ever heard. Can I use it on my floor?" And Howard goes, "Well, sure." And I'm just, my mouth is on the floor, because I can't believe he's talking to him. A very exclusive and very successful New York Stock Exchange market maker, and they're talking about his order type. So those are things that are very dear to me, because it still works. Everything we teach in that still works. I just keep modifying it, enhancing it, so that it's current with the new technologies.
you talked about Howard's order type before. Is there a name for it? And please tell me it's the Howard.
Yeah, it doesn't have a name. It's the
Oh,
Howard. It's the Howard.
all right. Well, it does now.
Bracketed order that protects you from whipsaws, and protects you. If you at market, then you're at the mercy of the PFOF market makers. Most brokers do not fill their orders anymore. They can't afford to hold the inventory, because they aren't directly charging you for your trading.
Hmm.
So they sell your order to the PF payment for order flow, a market maker. The market maker pays them a certain amount of money for every order that's sent over, depending upon the size and all that stuff. And Citadel has gone from being a bank to PFOF market maker, and so they fill the orders. And it's, as soon as you start typing it in, the broker can get it over there in a millisecond. There's 60,000 milliseconds in a second.
Yeah, it's
Super.
awesome.
And so they know, and so it comes back to you, and it seems like, oh well, a couple of seconds and my order is filled. Woo! Well, in that time frame, all kinds of other professionals are going, wow, there's these orders, toom, 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 toom. And at the speed, that 60,000 per second, that's a massive thing that people have to understand. And all those orders are lit, so everybody can see what you're doing. So if you're all in a chat room together, or if you're all in a group together, or you're in memes or something, and everybody's hitting that button at the same time, it's like everybody can see it. So they take advantage of that. So you have to have an order that controls that, and doesn't allow the PFOF to do whatever they want with your order. At market, you're wide open to being getting your order filled poorly. A limit order, you don't want to be in a limit order. Say everything looks great and everything, but all of a sudden the stock moves down and down, and it starts a correction, and you're in a day trading or swing trading. You don't want to be in it. So this special order type prevents that from happening. So,
So is it safe to assume that you use the Howard to get into all of your trades?
Oh, yeah, absolutely, yeah.
Okay.
Ever since he created it's like, "Wow, this is so cool."
Are there a percentage of your trades that aren't filled because you're using the Howard?
Yeah, and
I gotta
usually it's
continue to use
because
that room too.
yeah, usually it's because it reverses because, there are times once a situation happens and unfolds, and that's why you use it. He got frustrated because he was a day trader and I was a swing trader and I was killing him. And he goes, "I'm here all day. I can't even go to the restroom. I can't even get a cup of coffee. I'm here all day and you're just killing me." And I said, "Well, day trading is just too hard. It's just too time
Yeah.
consuming, too demanding, and the return is so low." Even in the days he was doing it, he says, "I'm going to switch to swing trading. I give up on this." He loved platform positioned also because it made it easy to get in and buy and hold, and he doesn't have to worry about it. He can just go on his boat and have a good time.
Yeah, you talk a lot about relational analysis, and I was wondering if you could kind of talk about that and compare it to other, like maybe fundamental analysis or technical analysis, or just kind of give us a better idea of what you mean when you say
Okay.
relation.
Then my relational analysis is a second doctoral thesis. I offered to the CMT, and they were blown away by the whole thing. It's advanced the body of knowledge of how to incorporate technical analysis. What it does is it embodies not just candlestick charts and indicators and all of that, but it also says who is in control of price. Because if you know who is in control of price of the 12 market participants, the buy side dark pools and slow accumulation, the pro traders in control, small funds managers, who is in control of price? Because at any one time, one really dominates most of the time. And that, rarely is there two, but sometimes there's two. So that tells you how price is going to move. That tells you if they're going to be using penny spreads or if they're going to be using that at market order or that limit order because they're a retail day trader and they just want to get that done. Or if they're small funds managers trading somebody else's money short term and they're gambling because they don't know what they're doing. They're very, very primitive in what they know and learn. So it tells you that. And so it also tells you how volume will behave. It also tells you how the metastock indicators that I wrote, I designed them and everything. I had a programmer write them. And just be honest, because I'm not a mathematician. But they're very specific to metastock, and they tell you in advance. The one is like, blows your mind. It spikes to the top of the chart on a white candle. That's telling you the next day it's going to go down. It's just priceless. And it spikes to the bottom of the chart and there's a black candle and it tells you that the next day is going to move. Knowing in advance one day that movement can make a huge difference. You don't have to wait for the price crossover indicators, which require that price move in that direction before it crosses. So it saves you a lot of time. So that's the relational. Also, I can outline the fundamental levels on the chart, on Metastock charts, and say this is the fundamental level. Okay, we know that the fundamentals are up here and price is below, and that's a lot of what's happening right now. Is fundamentals are up here. And the earnings reports and the revenues reports quarter over quarter were great. 90% of the companies did very well. That's above the average. And so we have prices that are below. So it's going to tick up into that fundamental zone. That helps you decide, oh, let's swing trade this stock because it's moving up. It's got some little jerky things in it, but yeah, we can run that stock right back up into that fundamental zone. So we're looking at fundamentals, we're looking at technicals, we're looking at market condition, we're looking at market participants, all in the relational analysis. So it gives you a better concept of what's going on. It's like being in a room with a whole lot of people and listening to everybody's conversation and evaluating what if somebody yells fire, what people are going to do.
Last time we talked, you talked about the 6 different market conditions,
Mhm.
and what I wanted to know is what market condition are we in now,
We're in a
and how
moderately trending market condition. Yeah.
a trending one?
Yeah, we're in the bottoming phase, but it's moving into moderately trending. Yeah.
Okay. Was it different than last time? I don't remember where we were last time.
I don't remember.
Okay, fair enough. Fair enough. Um, how does that affect how does that affect your trading, knowing that you're in a
Well, with a moderately trending market, you'll have two really strong things that you can do. Moderately trending has a very choppy or volatile intraday, so it's going to be harder for day traders. And every time I look at the intraday on indexes or stocks, I'm going, oh, that was a rough day for the day traders. If you could just get out of the idea that this professionals don't day trade. Sell side institutions, floor traders day trade against you, but the professionals on the buy side, they haven't been day trading for years. Not the pros, not the really ones that are bringing down the big bucks, about 6 and 7 digit incomes. They are swing trading mostly, and they can have as many as 10 legs on an order. So they're mitigating their risk all the time. So with a moderately uptrending market condition, we have a lot of control for swing trading. We can jump in with the pro traders and then ride the wave up because they'll let everybody know, smaller funds and HFTs and memes groups and everything, they're in the stock, and then somebody else drives the price up. They don't drive price up. They just initiate that, what I call a nudge. And when they nudge and they nudge and they nudge, then all of a sudden, boom, that thing will go up. And so all you have to do is get in on one of their nudges before it moves, and then just sit back and go, yes, this is so cool. It's easy. Yeah. Once you learn how, it's not easy to try to figure it out for yourself. That's the big thing, is that in anything in life, education is the most precious thing that you have. And yet most people resist spending money on education and resist spending money on a high quality charting software program. So uh, that is critical. Those two things are critical to your success. Pinching pennies there is just plain foolish and unwise, and it designates you as a hobby trader rather than a semi-professional. And you want to be a semi-professional making $1 million a year, or however many millions you want to make a year. It will take time to build up your capital base, but students do it.
Do you feel like recently that the markets have been a lot more news driven?
They were extremely volatile during the late stages of January. February was extremely volatile. March was bad, and April was a bottom, and all of a sudden support the market kicked in there. They were just, so we had sell side institutions going, yeah, let's drive the market down, let's make lots of money, yahoo, because we're the market makers and we're selling short, and we're going to drop that buy to cover 20 points or 30 points down, then we're just going to sit and wait for people to panic and go down. Yeah, that's what they do. Buy side going, not going to happen. If it goes to this certain level, 401k holders who hold a lot of ETFs are going to start dumping their ETFs. There's no way we're going to let that happen. There's a war going on between those two. You talk about everything in politics around the world, and just focus on the stock market. We have the buy side who are supporting and protecting fast trillions and trillions of dollars of assets under management, 401ks, IRAs, and all this stuff. Okay. They only make money if you make money. Okay. So they have to protect your wealth. And then we have the sell side banks who always, banks are stupid. They've had every major collapse of the market is caused by the banks, except for pandemics. And then that was the government's fault. Shutting down the market the way they did. The lockdowns were improperly done. They should have done it a different way. But the banks just constantly get into really high risk situations, and they don't care because they know that the government will bail them out and they'll be okie dokie and eventually. But the buy side never got any bailouts from the government. They had to protect themselves. Mutual funds were collapsing after the 2008 banking debacle. They were collapsing because they had bought a lot of mortgage-backed securities, and they said, we don't feel comfortable with these banks, because they were buying from the banks at that time. They don't buy from the banks anymore. And so the bank said, oh, we'll write up credit default swaps. So if there's a default, you can sell that default and we'll refund your money with the credit default. Well, the credit defaults were based on nothing. They were error. And so the mutual funds are going out of business. People are demanding redemptions. So they slowed their redemption demands. And then people got angry because they kept losing money. They couldn't get their money back. Mutual fund industry almost collapsed. And then they got together, the buy sides got together and said, what do? ETFs. We sell ETFs. We create a lot of ETFs. We sell those ETFs. We tell people that they can invest in these. And if they want to get out, they can get out like a stock. and it triggered this momentum, and they saved themselves. So they have learned they can't trust the sell side. They don't buy anything from the sell side anymore. Smaller funds do, but the giants don't, and they know they have to protect those 401ks. So they have to support the market. It gets to close to 20% decline, which is the cusp of the bear. Boom, and that's what happened. It got really,
Yeah.
and then and it's the only time they create a momentum upward. It's the only time when they support the market. It's dead obvious on those charts. Metastock, if you go in and you'll see black, and then all of a sudden this huge white candle, that was the dark pools, buy-side institutions protecting the 401ks by bringing it back up because they know they will hold if they can keep it above 20.
Do you so we've obviously kind of had a huge volatility spike
Oh, yeah,
recently.
a massive volatility spike. It's like, what is this like? How can I explain this to students? And I'm going, let's throw the politics out. I mean, I don't care about politics. I could care less about them. I haven't ever been impressed with a president since, and I doubt I will in my whole entire life. But what happened in March, April? That has happened before. Supply chains crashed. The supply chains crashed. No product was moving anywhere in the world. We had the same impact as the supply chain crash when they locked down all the economies. Stupid. The supply chains crashed. So the support the market kicked in and got that back up so that it was above the 20. And corporations go, we can't have this. We have to do something. And they all looked at Amazon. They've been looking at Amazon since the 2020. Amazon's got their little ships going everywhere, and they've got their little private ports. They can get into, because their ships are smaller, they can get even into dinky little ports. They own the port. They have, and Amazon all through the pandemic, they were just killing it. They were selling right and left. They had inventory and they had no problem. Everybody else's supply chains are all collapsed. So this collapsed, but again, Amazon doesn't care, and everybody's going, wait a minute. So for the past 5 years, all of the corporations who do this have been building their own supply chains. They've been building their own little things. So they starting to get this activated. It takes at least 5 years to build this stuff. Okay, and the talk about, let's move all our manufacturing back to the U.S. That started in 2020, folks. They started building these new facilities for manufacturing with all robots. 3 people can manage this massive manufacturing facility with all robotics and robots running the whole operation. And they're already poised to open this year, magically. And guess who gets to take credit for it? But it's been going on. So they were quickly could recover from it. And that's one thing that the buy side could see. They were talking to the corporations. How are you going to handle this? Well, we have our supply chain almost up. As soon as we get the supply chain up, and they have manufacturing facilities here and there, everywhere in the world. So who cares about tariffs? Go ahead, do the tariffs. We don't care because we're going to go through this. The corporations are smart. They're not going to let anybody, they may act like they're, very, very, down and everything, but no, they're not. And the brilliant work that's been going on. I mean, Apple's got this fantastic manufacturing facility here in the US. And they've been working on it for 5 years. It's going to open soon. And it will withstand severe climate change. And it's run by a couple of people with all kinds of robots and robotics, because we don't have enough people to fill the jobs we have. We have 7.3 million jobs opening, and we have 3 million people unemployed. We don't have enough people. So they're all going to robots. That's where the money is, folks. The money is in getting an education, using Metastock, and trading profitably, because this is huge. It's huge. It's going to be bigger and longer than the 1990s. And I'm not predicting. I am just simply seeing the cycle analysis. Cycle analysis is my forte. Somebody tells me that I'm one of the top ones right now. It's going to be a longer one because there's so many more. We only had 6 new technologies in the 90s. We have 20 this time around. Huge. huge. So you want to not have to worry about all of the stuff going on. Don't have to worry about recessions. Don't have to worry about anything. Get your Metastock charting software, learn how to trade, and you will be fine. You don't have to worry about the economy. You don't have to worry about the politics because the stock market's always going to be there and there's always going to be money. And that is what's going to rescue us. There's no way that the government can deal with the deficit or anything that we the government debt load. It's the corporations that will fix it.
All right. What sectors if would somebody be looking at if they're looking at these 20 new technologies? Where's the best sectors positioned to kind of grow from that?
Oh, there's so many of them. Let me see if I can get my thing up and see where I have this. I have I have it all written down in my, oh, here we go. Okay. So the 2025 to 2030 integrated artificial intelligence. We have artificial intelligence as a baby. It hasn't even begun to do what it's going to be able to do. It's going to do a whole lot more. They're integrating it into systems like robots and robotics. Robots and robotics are really huge. Spatial computing, real-time simulators, that's going to help us trade better. Um, we have hardwired sources technologies for AI. Crypto technologies, this is now a mainstream. Coin tokens, non-fungible tokens will be things that we can trade. Of course, robotics and robotics replacing human workers. There won't be that many replacing human workers. They're simply going to fill jobs. Humanoid robots for healthcare, that's something Japan is going on. They even have a new type of biotechnology blood that is manufactured blood so that they can take care of people. AI-based sensors, integrated technologies into that. Nanotechnology phase 3. Nanotechnology is still in its infancy. It's used in paints and things like that. They're going to start integrating it into, and AI will help nanotechnology grow. Quantum computing is coming along faster than we expected. And it's growing. So there's actually some companies that are in the private NASDAQ private market that are looking pretty strong. That's going to change everything. AI will help that. Uh, quantum-based quantum-based cryptography is going to come. Atomic technology fuels that are climate friendly. Augmented reality is kind of in the back burners because that's more of a thing that's happening for retail sales. Integrated wearables and smart tech clothing. Eventually, you will not ever have to wash your clothes. Yeah. We have phase 3 of advanced machine learning, which will assist AI. Machine learning is the computer crunching numbers. Massive data. They have so much data. AI analyzes that data, okay? And then the analysis is gone through to assist the traders. Floor traders are growing in numbers. There are not enough floor traders, qualified quality floor traders to go around. That's why they're coming to me to learn so they can get their jobs because the industry is using more floor traders for buy side and sell side than ever before. And there are more independent traders as well. So AI is not replacing floor traders. That's a misnomer, not happening. Distributed ledger, it needs to go into phase 4. Everybody's using it. Metaverse isn't doing too much. I don't expect too much. It's kind of sitting on the back burner. It's got things. And then big one that's pushing a lot of companies, business hyper automation of the IT department. When you get all of your right before this, the IT departments have gotten so massive with hundreds of people and all this convoluted, complicated mess of infrastructure. And they're going, this doesn't work. This pulls IT of the major corporations and even smaller corporations all into one unit, and you end up with 3 guys rather than 100 guys. It's just a situation that is going to help the corporations be far more efficient with their new technology and AI and use of that. So all the guys that are IT guys that are losing their jobs, you should go over to AI because that's where the job market is. It's huge, it's massive, and it's growing even faster. Semiconductors, no matter what you do with AI or robots or whatever, you need new, more powerful semiconductors. The semiconductor sector is going to be huge. Don't listen to the people who are saying that it's all over. It's just beginning. It's just beginning. It's massive. And supply chain reinvention platooning is huge as well.
That's quite the list.
Yeah.
Moving on to teaching a little bit. What would you say are the common misconceptions that new students of yours bring in when they come to courses with you?
Well, they always say, "Oh my gosh, I didn't realize there was so much more to it." They just are just completely blown away by that. They think that they go online and there's these ads and these, "Oh well, you can sit with me and I'll trade and you'll learn to trade," and they're just doing really basic old old school stuff from the 90s or the early 2000s, 20 to 2000 to 2010. This is 2025. Get over it. Um, and there's more information that they don't have that they really need, how the market structure works and why it works. So there, several, I was giving away the market structure report to get people to see so they could read it, so they could see, oh, wow, this is what I don't know. And it's a lot of information in it. And a lot of them were just totally had no idea. It's a very structured but very learnable situation, but you just have to get it. And that's what's missing is this giant hole in their education. Everything you learned, everything you learned from Jeff, everything you learned from everybody else is valuable, but you have to pull it all together and make sense of all this stuff so that it's an easy, streamlined thing so that you can focus on what you need to do and stop trying to rely on here's a stock to buy. Well, the pros already know that they're gonna take it and write it. They are.
You've had a lot of traders or students that have gone on to run hedge funds and that kind of stuff. What do you think they do more consistently that others don't?
They understand what's going on in the broader market. They understand more of the market participants. They understand the infrastructure and where they fit into that infrastructure. And so they have a broader concept of understanding of what's going on than they do without the courses. They all say most of them take a lot of my courses. They'll take many courses because then they want to specialize, and I have specialty courses and designed just for them. And so they'll take a lot of courses, and they still say that the information is invaluable as far as their profession and their grasp of what's going on. So they have a broad overview. It's kind of like being a spy and looking through a hole and seeing all the activity on the floors and things and what's going on and being able to understand what's going on rather than trying to guess.
How do you feel like the role of retail traders has changed since you started?
Well, right now there's a big push to get more and more retail traders going. BlackRock is just all gung ho about getting more retail traders. They say there's only about 4% of the market is retail traders that's on. But BlackRock is really pushing to try to get more individual retail people trading stocks. And I agree because you're not going to be able to make it with just your regular salary. You're going to need the meta stock and the education and all this stuff speak to augment your education or to just have a career as a trader. It is a career path. And with the breadth and depth of the market derivatives these days, I see where he's coming from. That yeah, we need to encourage more people to take the job of trading stocks and look at it as a job rather than just something fun to do in the morning or I'm retired, so I can do this and play around or whatever that is. I know a lot of millennials will play around with it in the morning with some of the different shows that are on, but they're not serious about it. And you should get serious because there's money. I mean, I don't worry. I can always make money. I never worry about what the economy is going to do. I don't worry about it because I have separated myself from that risk factor totally. And it doesn't matter if it goes up, okay. If it goes down, okay. You can always make money. You just have to understand it in a way that's more dynamic. It's very dynamic and it's constantly evolving and changing. So you need to adapt to that and just say, okay, the market condition right now is platform. Okay, so we'll switch to that kind of thing. Because swing traders can swing trade those platform markets. Yeah.
I wanted to ask you about ETFs. When we talked before, you talked about ETFs particularly being fragile. And I want to kind of just talk a little bit about that. Would you recommend traders stay away from ETFs if they
No,
want?
no, no. I
Okay.
probably said the wrong word. And so let me clarify that and correct that for you. I meant that if we have $300 trillion of assets under management, and we have all these 401ks, every corporation has 401ks or a private pension fund, or people's IRAs, and the Gen X's and the millennials and some of the older Gen Zs, the younger generations are buying ETFs. They saw their parents and grandparents lose a ton of money a couple of times, and they're going, I don't want to own a stock. I want to own an ETF that I can sell like that. And they're right. So it's fragile in the terms of, if we have all those 401k young investors panic and they start selling the ETFs and going to cryptos or gold or whatever they think is a safe haven because they think the end of the world is coming. And I would just love to gag one of the big banks CEO's mouth, because he keeps talking about recession. He's been talking about recessions for 6 years now. It's like, shut up. It's not going to happen. It's not going to, there's no recession in sight. I have these barometers and there's no way. There's no recession unless you crash and burn the ETF investors. And the buy side institutions are not going to let that happen, nor the derivatives developers like BlackRock, State Street. They're going, no, don't sell your ETFs that are in long term. Keep them, hold them. So when the ETFs started selling, and I kept telling my traders, I said, it's ETFs. The investors, the young investors are selling their ETFs. They're selling their ETFs. They're running for cover. They're buying gold. They're buying cryptos. They're buying all this. I said, and sell side went, derivatives went, no, don't do that. And so BlackRock, and in particular, and State Street, went in there and started buying up all those ETFs that were for sale. Then, the younger generations were selling them, and they were buying them like crazy back into their inventory to support them. Yeah, they're big. That happened in March, early April. They were going down, down, down. And that's the scary part, because it's so easy to sell something that is a ripple effect, because an ETF is like based on the S&P 500 or the NASDAQ 100 or the Dow, DIA, or a specific like biotechnology or semiconductors, where ETFs were being sold. And so then that ripples over to the stock prices, and it ripples over to the indexes, and it causes mega damage. So we can't have that. Yes, you can sell that ETF like that, but if it's a long-term investment, you should hold it. But the ETF investors are young, and they're scared to death that they will experience what their parents experienced. So they were selling. We got them calmed down.
Do you have a favorite quote, book, or lesson you find yourself talking to about new students a lot?
Uh, I often use, I get up every morning and I look at the charts and say, Martha, what are you going to learn today? Because you don't know everything about the market. I
I like.
also I also say, trust yourself and trade wisely. Trust yourself and don't rely on other people to give you recommendations. That was the biggest mistake I made as a young investor, because I started out long term and then became a trader. Trust your own instincts, because you will defend instincts. I mean, you'll be going along and you'll look at some metastock charts in one of our scans, and it's like, oh, sweet, this one's going to go up. It's not predicting, it's that you have this magnificent brain that is a million times smarter and more intuitive than AI, and it recognizes a pattern you've seen before. And it's like, okay, I'm buying that. Trust yourself and trade wisely. Don't follow the crowds. Don't chase stocks. Don't um, rely on recommendations, because they don't know you. The group doesn't know you. Each of you is extremely individual. I don't have any students that are at all similar. They all trade differently. They all have different goals. They all have different ways of doing it. And it's great, because they come up with we have their own trading parameters that suits exactly what they want.
Sorry. Thanks,
Oh,
Colin. All right.
all right.
I usually put on my do not disturb just so Greg doesn't comment on these things anyway.
She says, enough is enough. We've heard too much from her. All right.
No, you've done great. I don't have anything else though. Do you have any final thoughts you want to share? The website is technitrader.courses.
Yeah.
You can call 888-846-5577 to learn more. Any
I'll
final
say
thoughts?
raise your expectations of income, trust your instincts, and trade wisely.
Very cool. Thank you so much. Not just for kind of being here on the thing, but for all the support you've given us over the years. And
You're a great partnership,
yeah,
and your software is awesome. Internationally, it's just the best of bests. Yeah.
I won't argue that.
No,
Thank
you
you for
don't.
the awesome courses too. Your contributions have been crazy,
All right. Good.
and I mean
Have
that in a good way.
bye.
All right, thanks.